Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Core Scientific Inc. Annual Report. Core Scientific Inc. offers a range of businesses and services that cater to the digital asset mining industry. The company operates through three main segments: digital asset self-mining, where it deploys its own large fleet of miners within own digital infrastructure; digital asset hosted mining, which provides hosting services for customers' digital asset mining equipment; and HPC hosting, a data center space licensing service. The company's services include deployment, monitoring, troubleshooting, optimization, and maintenance of customers' digital asset mining equipment. Additionally, Core Scientific provides electrical power, repair, and other infrastructure services to operate, maintain, and earn digital assets. The company also sells mining equipment to its customers, making it a one-stop shop for all their digital asset mining needs. In summary, the list of businesses and services provided by Core Scientific includes digital asset self-mining, digital asset hosted mining, HPC hosting, data center space licensing, deployment and maintenance of digital asset mining equipment, electrical power and repair services, infrastructure services for operating and maintaining digital assets, sales of mining equipment. Unfortunately, I do not have access to the text you provided. However, I can provide a general template for an overview essay on what may cause a stock price to increase significantly. The stock price of Core Scientific Inc. (TX) has increased significantly in the past year due to several factors. One major reason is the growing demand for cryptocurrency mining and blockchain technology. As more companies and individuals invest in these emerging technologies, the need for specialized hardware and infrastructure increases, benefiting companies like Core Scientific that provide such services. Another factor contributing to the increase in stock price is the company's expansion into new markets and industries. By diversifying its offerings and reaching new customers, Core Scientific has been able to tap into new revenue streams and increase its market share. Additionally, the company's focus on innovation and research and development has led to the creation of new products and services that are in high demand. This has not only driven revenue growth, but also helped to establish the company as a leader in its field. Furthermore, the overall trend towards digital transformation and increased adoption of cloud computing has created a favorable environment for companies like Core Scientific that provide infrastructure and services related to these technologies. Overall, the combination of growing demand for cryptocurrency mining and blockchain technology, expansion into new markets, innovation, and a favorable industry trend have all contributed to the significant increase in Core Scientific Inc. (TX) stock price over the past year. Core Scientific Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Core Scientific Inc. trades at a lower price-to-book ratio of -5.17 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 151% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the industry can be attributed to several key factors. One major trend is the shift from digital asset mining to colocation services, with many companies transitioning their focus to this area. This shift has led to an increase in demand for high-density colocation services, resulting in higher revenue and profitability. Another significant factor affecting revenue growth or decline is the fluctuation of electricity costs due to commodity price volatility. Companies are also experiencing changes in lease revenue and payments, which are becoming increasingly important drivers of revenue growth or decline. Furthermore, the growing demand for digital asset-hosted mining services is contributing to revenue growth. In contrast, companies that have not adapted to these trends are experiencing a decline in revenue from digital asset self-mining. Overall, the industry's primary drivers of revenue growth or decline are closely tied to changes in business models and market demands. The net income of the company underwent significant changes between 2024 and 2025. Initially, it decreased by $82.1 million in 2024, but this trend continued with an even larger decline of $288.6 million in 2025, resulting in a net loss. This substantial drop can be attributed to various factors. One major reason for the decrease was the shift in market demand and technological advancements. The rise of cloud computing, machine learning, and AI led to increased competition and reduced revenue from processing transactions on networks. Additionally, higher power costs and regulatory compliance costs further exacerbated the situation. State regulations affecting data center operations also played a role. The company's profit margins were affected by several factors, including increased difficulty in mining, tariffs on imported goods, and rising electricity costs. The decrease in gross profit and gross margin in the digital asset self-mining segment was primarily due to lower Bitcoin production. Furthermore, the reduced revenue from mining operations as a result of the halving of rewards on the Bitcoin network contributed to the decline. The combination of these factors led to a significant decrease in net income and profit margins. The company's inability to adapt to changing market conditions and technological advancements resulted in substantial losses. The company's financial performance has shown significant improvement, with the generation of positive operating cash flow. This is evident from the data presented on page 60, which highlights a substantial increase in net cash provided by operating activities to $2,783 billion in 2025. This achievement indicates that the company is successfully managing its operations and generating sufficient funds to cover its expenses, thereby ensuring a stable financial position. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased from $1.09 billion in 2025 compared to an unspecified amount in 2024. However, this increase was largely due to the issuance of new convertible senior notes, which added a total of $1,085 million to the company's debt. On the other hand, the interest expenses decreased by $23.2 million due to lower interest rates on outstanding debt. This reduction is attributed to the repayment of higher interest notes and debt facilities, which totaled 5 in number and were fully repaid in 2025. The company's decision to repay these high-interest debts has resulted in a decrease in interest expenses, indicating a more cost-effective approach to managing its finances. Overall, while the debt level increased due to new note issuances, the repayment of higher interest notes and debt facilities has led to a significant reduction in interest expenses. This shift suggests that the company is taking steps to optimize its financial position and reduce costs associated with servicing its debt. The performance of various segments and regions in the industry can be summarized as follows. In terms of regional presence, several states have a notable number of facilities, including Alabama, Georgia, Kentucky, North Carolina, North Dakota, Oklahoma, and Texas. However, it is worth noting that none of these regions are mentioned as performing particularly well. On the other hand, certain segments have shown improvement in specific locations. The colocation segment has seen increased revenue in Denton, Texas, Marble, North Carolina, and Austin, Texas. Additionally, self-mining operations have performed well due to experienced leadership teams and cutting-edge technologies. In contrast, some segments have struggled. Digital asset self-mining revenue has decreased, while hosting activities are dependent on various factors and do not show clear indications of success or failure. Overall, the performance of different regions and segments varies, with some showing promise and others facing challenges. Management is signaling a significant shift in the company's strategy, with a focus on high-density colocation infrastructure. Over the next 3 years, every megawatt in its portfolio will be converted to support high-density colocation services. This move is driven by growing demand for artificial intelligence-related workloads and next-generation colocation services. The company expects to increase revenue from high-density colocation as additional customer capacity becomes billable. To achieve this goal, management plans to optimize cash from the sale of Bitcoin received from mining activities and shift capital allocation towards high-density colocation infrastructure. The strategy involves generating revenue through colocation services, including licensing data center space and providing power delivery, physical security, and maintenance services. In essence, the company is transitioning away from digital asset mining and focusing on a more lucrative business model centered around high-density colocation services. This strategic pivot positions the company for long-term growth and increased profitability. The company has made several strategic moves to expand its data center footprint through the acquisition of new sites, including land and power capacity. This expansion is aimed at increasing its presence in the market. On the other hand, the company has also undergone significant divestitures due to various reasons such as bankruptcy declarations by Celsius Mining, Voyager Digital Limited, Three Arrows Capital Limited, BlockFi Inc., FTX Trading Limited, and Genesis Global Holdco. LLC and certain affiliates. These divestitures have resulted in a significant reduction of its assets and operations. The current state of supply chains is a pressing concern for various industries, including high-performance data centers. One major issue is the extended lead times for certain components, which can range from 12 to 18 months or longer. This not only affects the timely completion of projects, but also increases costs due to delays and potential losses. Another significant challenge is the difficulty in securing large amounts of power capacity, partly due to skilled labor availability issues. Furthermore, the dependence on a single supplier for mining hardware raises concerns about supply chain disruption. The industry's reliance on specific materials, such as construction materials, electrical transformers, generators, and other equipment, also makes it vulnerable to disruptions. Government approvals, power allocations, land acquisitions, and easements can further delay construction projects. Change orders, modifications to designs, and construction plans can also increase costs or reduce the usable electrical power footprint. Supply chain disruptions, including labor availability issues, may lead to increased high-density colocation service costs. The challenges in obtaining adequate numbers of new and replacement miners at scale are another concern. Overall, these concerns highlight the need for companies to develop contingency plans and diversify their supply chains to mitigate potential risks. That concludes the financial summary for Core Scientific Inc. Feel free to comment below, and I will be happy to answer them when possible.